As Bitcoin struggles to maintain above the previous all-time high of $20,000, it looks like we're setting up with a potential breakout on some cryptocurrencies. So let's take a look at that in today's video, the trading opportunities that may lie present in this bear market, what price targets we could look for within cryptocurrency, and of course, whether Bitcoin is going to hold this low for the time being. Now, I've got another video coming up on the channel later this week looking at the macro play here. So make sure you are subscribed to the channel with the bell notification icon turned on. We do have the 4-year cycle to update. And then, of course, looking at this macro play for the rest of 2022. Hit that like button as well. We are getting some fantastic support here. So thanks very much to you guys. And of course, stick around to the end of the video as well so you can drop those emojis and it can answer some of your questions in the comment section. Now, let's take a look at Bitcoin over the last couple of days. In the last video, we were looking at the possibility of Bitcoin just having a small retreat before we're going forward for a breakout. Now, this is what we're looking at in yesterday's video, the amount of days that the market heads up and why that is so important so that we don't purchase those tops and we look for the potential pullback and then confirmation when we look for a trade. So people want to know what's going on now. What is Bitcoin doing? Well, to me, it looks like we're putting in a local low at the moment based on what we're seeing in terms of the move up. So what the buyers are doing, are the buyers stepping into the market to support the price now? And are the sellers just starting to dry up? If we're looking for a macro play, you won't know whether the market has turned from an hourly or a daily chart. It just doesn't happen like that. If the market has turned for the big picture, you need to look at the big plays, the monthlies and the weeklies, which is why we're looking at that in a separate video this week. And so from this point, we can start to look at some of the smaller cogs. Are we getting that turnout so that we can then start to head up higher from this point, potentially get some trades, which could net us anything from these current levels to some resistance levels at about 20 odd or 30%, just looking at Bitcoin. Now I'll look at the cryptocurrency market as well, just to give us an idea of some prices, some percentage gains to the upside before we hit critical resistance. The other thing we're looking at yesterday was the amount of days up in the market, and we saw 3 days up and that 1-day reversal. That's what we were looking for. If you remember, we checked back over the history of Bitcoin, and during the bear markets, it had these sort of 3 to 5 days up. Of course, there's going to be some 1 and 2 days and some days that are a little longer as well, depending on what the stage is of that market. But generally speaking, we had those few days up, and that's what we're expecting this time. So in the bear market, if we were dollar cost averaging in, then we would probably wait for the pullback, and at least that'll give you a slightly better price. You never know how far down it's going to go, but in this case, we're looking, towards about 50% if that was the top. And you can see just where the market has started to pull up. There's no confirmation that that this is the low at now $19,744, but it's a pretty good area, considering we've gone up 3 days, had a 1-day reversal, and it's starting to find support at that 50% level of 19,650, getting ready for potentially another move to the upside to try and test some of these higher levels at 22.5, 25, and then if we're lucky, get all the way back up to those higher $20,000 regions. Now, before I go on to more Bitcoin updates, we have a exchange for the US users as well here. So it's BitGet, and you can get huge sign up bonuses with the link down below. And I've managed to get an exclusive sign up bonus for you guys if you deposit up to $2,500 into the futures accounts. It's not saying you have to trade or anything like that, but you can get up to 10% on that amount of money. So that's a pretty good sign up bonus considering some of the other ones out there. And also there is up to $8,000 depending on how you want to play these tiered rewards. So check it out. Link is in the video description. You can trade spot, as I'm showing right here. So I know some people get triggered when it comes to leverage trading, but everyone's going to use an exchange. And what we've seen over the past with the likes of Celsius and BlockFi and all of these other apps which try to show you that they're going to be safe investments, they have failed. They have lost people's investments in those platforms, and the exchanges so far have been faring the best. Now, I still think it's probably best to keep most of your crypto, if you're holding longer term stuff, maybe stables, maybe Bitcoin or ETH, in a hardware wallet. But if you're looking to trade, then personally, I like to spread the risk out over multiple exchanges, just in case one of the exchanges decides to pause withdrawals, just like we saw with Celsius recently. And so that's why I've got several options down there in the video description. If you want to keep a hold of your own privacy, you don't have to enter your KYC. As you can see here on this account, you don't have to put your KYC in either. Now it gives you a withdrawal up to 20 Bitcoin. So if you're trading over 20 Bitcoin, good luck to you. But moving on to the Bitcoin chart again, as I said, those links are in the top of the video description. I'll make some more videos on that in the future. And that is for US customers as well. Bitcoin, the swing chart, the pattern that we're looking at here, that does look at the moment very much like an inverted head and shoulders. So if we can get the break, well, if we get the confirmation first that this is a low, maybe we get a little bit of a lower low and then the break, generally we look at the upside being this section right here. So if I take a couple of these away and then draw a straight line and we just pick up and move this line here to the next shoulder, we can get that. And, it doesn't necessarily matter exactly. We're not going to get an exact target for it. You can get it from wherever the market breaks the neckline. We're looking somewhere close towards this 50% market to $25,000 for Bitcoin. So that's where I would then ladder this analysis in with the cryptocurrency analysis. We take a look at total 3, the moves to the upside. So if Bitcoin started to find some resistance, then potentially we're going to find some resistance for the cryptocurrency market as well. Looking to the upside in terms of a percentage from the low here to the first resistance level, which is looking like where the market wants to get to, that's only about a 23%. But if we can break through that and then move towards 50%, that gives us an upside of about 80% from the low. So if you're taking any trades for cryptos in amongst this region from this current low of about 320 billion up to approximately 580 billion, just ensure you take a look at where the total market cap currently is, because that would then show up potential resistance for the overall market, which then you could then find the market falling. Now, why am I taking 80% and seeing if it breaks through this support zone, come back up here, which was a previous support zone before the market took a significant dive past 580? Well, lots of reasons, actually. You got a major 50% level here from the top to the cycle low. So that's a 50% at about 580 that you can see here. The other 50% level, which is almost dead on, is this one right here. And that's from the top to the bottom. This is before the market broke down into that low, 320 billion up to 840 billion, halfway point 580 billion again. So a beautiful halfway point here. Take it off log, you can see how equal that is just there. So there's another reason for that. 80% we just saw. Let's take a look at what's happened in the past as well. So go back to this previous cycle, market tanking. We do see quite significant bounces, and bounces within a bear market that are more tradable than other bounces. Like these bounces here in September and August and maybe even from October, you can see that they're quite small. And obviously you don't know that at the time. You're not sure whether this will go further than the others. But you can see that these were 50%. So there's still something that's slightly tradable in there. Low to the high, 66%. But this is the big one here that we're all looking for. That's the sort of bounce that we want to see. That went up 143%. So we're only looking for about an 80% bounce from that low. So there's 143%, and the other couple of bounces early on in that bear market, there's 117. Now, in this bear market, we haven't seen too many significant bounces. We saw 43 from the first one. We saw another 35%. We saw in February and March, the one that everyone wanted to get on board, which really wasn't that much. And yes, I do have videos on the channel saying a reason why I wasn't interested in trading that bounce. Only 44%. The reason is that there's not enough upside, in my all my opinion, of course, from what I can see from the charts, not enough upside for the potential to the downside. And that has, of course, proven itself correct over time. Now, in terms of this, we have been down for a lot of weeks. So you can see a lot of red there, a lot of red. And the highs are basically getting all lower, with the very minor exception here in April of that little bounce. And at some point, this has to spring back the other way. And the best times for the big spring is when you've been contracted the other way. So there's like a massive rubber band, it's been pulled and pulled and pulled and pulled, then you should get a reasonable snapback. That doesn't mean that we're out of the bear market. I don't think that's the case at all, especially not for cryptocurrencies. I still think we're going down to these levels, somewhere in the high 100s, low $200 billion range for all of the altcoins, including the stable coins at this stage. And so I think this might be the opportunity to get at least a much more significant bounce than we have seen the entire way down. And I think some people will agree with that, because the biggest bounce we saw was 44%, and altcoins generally do more than that. You can see here it was only 43%. So I think this is the opportunity that will have a more upside, and we're still close to that downside. So we've got to wait for some confirmation and hopefully start to see that move to the upside. So basically, I want to see some upside, bigger reward to the downside risk. And right up at these levels, the downside risk was still too high compared to what I could see to the upside. Whereas I think that's starting to flip now for the traders, long-term investors, different story. Don't confuse those two. I think the long-term dollar cost averaging stuff is still quite some way off. And we can see that from history. It has taken 2 and a bit years in this case from the previous cycle. And then even on the way up, you can wait for the breakout, for the confirmation before you get in. And sure, you miss the exact bottom, but again, we're not here to catch the exact bottom. We don't need to sell the exact top. A nice saying I heard from a friend at a cafe this morning who got wrecked on Luna, unfortunately, but a really nice saying: get off at the second last station. You don't need to get off at the final destination. Doesn't matter. What I always say is the money in your bank account doesn't know which stop you get on or off at in the ride. It just knows how much money you have left in your bank account after you've hopefully made some profits, because it definitely knows when you've made losses, and it doesn't know whether you got in at the top and then got out at the end. It just needs to know how much money is in your account. So don't worry about catching bottoms or catching tops. It doesn't matter at the end of the day. What we're looking for is Bitcoin to hold some support at these levels, which it looks like it wants to do, especially after these run downs, and they're starting to reverse. You can see the move up here, more in price and more in time. The start of an overbalance to the upside in the short term is a good sign for this market to at least attempt to hold this bottom. The test was yesterday. We came down a little bit. Maybe we have another test day, provided we hold, I think, above approximately 18 to 19,000. We could be in for a nice bounce on the cryptos, some nice trading opportunities over there. And if you are interested, check out the link to BitGet. The link is in the video description. Get up to 10% on your deposits. And if you go for the bigger deposits and you're a trader, experience with your plans, you can get up to $8,000 of bonuses as well using that link in the video description, open to US guys as well. So check those out down there. I'll see you guys at the next video. Make sure you subscribe and like, and leave me in a fire emoji in the description, in the comments, if you made it this far. I've got this video coming up as well. I really want to get into this. This is looking at the macro play of Bitcoin and what we're looking for coming up over the next 6 or so months. We're starting to see some good signs here. It will take some time, but I'll get into this more in another video. So until then, have more fun to get more done.